This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I think today is Judgment Day. I really do, and you're hopefully going to see exactly why I think that when we get to the charting section at the end. I am practically back to full exposure and have been adding as I believe some cycle lows are in, but we really do need to see some green closes today. If we don't get some green closes, if we don't get a VIX come off significantly, then we have to be open to some downside and some danger. So today I'm largely going to focus on what I want to see from the charts as the weekly closes close out this week, and for me to start to breathe a sigh of relief and hopefully finally rule out and scratch off that 2007 distribution type fractal. In case you missed it, here's the CPI data from yesterday. I saw quite a lot of people talking about this as if this is hot or sticky inflation. I don't really agree with that, to be honest. And if we take a look at this, okay, the Camel Crew knows. What do they know? They know we've been talking about down, sideways wobble, and here's the key part, down, okay? So far, hard for me to make the case that things are not going according to expectations. I saw some people saying really silly things like deflation is invalidated and all this kind of thing. And to be really, really clear, right, we're not just going to get this slip into negative territory without a stock market meltdown. We need to have a stock market meltdown. We need to have a bear market because we need to see capital flight from the stock market into the dollar. We need to see traders like me exit all the stocks and hide in the short-term safety of the dollar. That is how we force the dollar much higher whilst the Fed is still late to cut. But don't get it twisted, we need both of those things to unfold. So yes, I still make the case that we are going to continue to see this thing come off in line with that snapback in the M2 rate of change. But the only way this thing actually gets negative is with a stock market crash. Now, if the stock market is going to crash, shouldn't we expect to see some kind of blow off top, right? Some kind of major breakdown? And if you ask me, that's exactly what is coming in the not too distant future, right? I'm still positioned long. I'm still long and bearish. I'm still expecting this third angle to push to the upside, okay? But eventually, when this thing breaks down, that is where we will get the deflation, okay? So we could even see inflation morph into some kind of look like this, right? It could chop around here, even bounce up, and everyone will go, just like they did here, oh, inflation is sticky. What comes next is this. But it's the stock market breaking down that causes asset price deflation. So if you don't know, now you know. And if you don't know, okay, please don't comment. Just just study, okay, or ask politely. Something I missed during the live stream yesterday was the initial claims and the continued claims, okay? Unemployment, the labour market continues to deteriorate. It continues to happen right before our eyes. I completely missed this in the live stream because I was so focused on CPI. But take a look at that, okay? That is not nothing. That is still going in the exact same direction that we expected it to go, which is unemployment is getting worse. They continue to fudge the data and lie about it. I'm not really taking this for gospel, but it is going in the right way. Just as when I put up the CPI data, this is going in the right way. And until this thing completely abandons ship and reverses course, until this completely starts to come significantly to the downside, until this starts to completely reverse course, then I stand with the base case expectations. Everything still seems to be going according to plan. And all of this is occurring, remember, at a time where it doesn't matter what you believe. It doesn't matter if you trust the data. It doesn't matter if you're a macro guy. None of that matters. What matters is this is a blow off top. And the higher it goes, the worse it's probably going to be. We were talking about yesterday, having seen the colder CPI print, we would expect to see the pause taken off the table and the cuts priced in a little bit more. That's exactly what we're seeing. You can see yesterday we were expecting around 20% probability of being paused, and now we are currently sat at about 15%. I don't really see a realm in which they can do a pause without deliberately tanking the market, but maybe I can be proven wrong on that. For now though, I do very much expect us to slowly but surely move towards this 25 basis point cut, and then I actually think it's more probable we see a 50. I really do, especially if CPI is going to keep coming down, especially if unemployment's going to keep going up, and especially if the stock market is going to start to break down from third and final angles. So wholly speaking, happy days. But it might not be as bearish as I think, right? Remember the new posture, the new position from Camel is long and bearish. And it's because ultimately it doesn't really matter what I think, it doesn't really matter what my analysis says. What matters is staying on the right side of the trade. So all the while we're trending up, I'm going to keep long in the thing, no matter how I feel internally. But I found this really, really interesting, okay? This, according to Mark Minervini, who is a multiple-time champion stock investor, he says this is the key to a sustained bull market, okay? Moderate, stable growth, not too hot, not too cold. And you can see the Goldilocks economy, we are right in that neighborhood that historically led to big rip-roaring bull markets. So maybe this thing isn't going to go as parabolic as I think it is. Maybe once we break down, we're not going to go all the way to new lows as ever. We'll just keep taking it one day at a time. But the reality is the S&P 500 is experiencing the strongest year-to-date performance of the 21st century. And again, to me, this just is another piece of evidence that suggests we are at the end of these longer-term cycles. Things get more and more extreme towards the major tops. And ultimately, I don't believe this can be sustained for much longer. We're also seeing sentiment starting to shift massively to the bull side, exactly what you'd expect as we start to move into third and final angles. Notice how almost 70% of the people polled here are bullish over the next 3 months. Once this thing starts to get to 75-80%, that is typically where I would expect to see tops come in. And if you think about it, given that we are probably about halfway, if not more, up this third and final angle, then there's probably not a great deal left here. Remember also the longer term cycle analysis video that I put out. All that data points to a top between the middle of November and the middle of December. So we are getting pretty close in my humble opinion. And like I said, right as you'd expect to see it, everyone is starting to think max long, long and strong, rip-roaring bull market, the roaring 20s and all of that jazz. No more recessions, Fed can't afford it. It's the same stuff over and over and over again. It's just most people don't have the experience to understand that. And I am not alone in this new idea of long and bearish, okay? Take a look at this from Mark again. Maybe this market falls apart and we get stopped on our positions and have to go back to cash for a while, okay? But as far back as Mark can remember, which is 41 years of trading, when there's a bunch of stocks setting up and he's nervous as a long-tailed cat in a room full of rocking chairs, as many are right now, okay? I don't actually get the analogy. If anyone can explain that to me, I'd love to know. But Mark is, again, long and nervous, just like I am. And like he says, in his 41 years of trading, every time he's been long and nervous and stocks have been setting up nicely, a leg up has ensued. As he said earlier, he would like to see the IBD 50 breakout, mid caps and small caps joining the party would likely give us an easy dollar environment. But it goes to show what the experienced traders do, right? It doesn't matter how you feel. It doesn't matter how much doom and gloom there might be out there. If the stocks and the charts are setting up, then you have to respect the price action and you have to trade what is in front of you rather than what you think is about to happen. So both me and Mark are long and bearish, or long and nervous in Mark's case. And in case you haven't seen it, Bob Lucas put out a 4-year cycle journey video yesterday to YouTube. And as far as he's concerned, okay, this right here is the last weekly cycle low. And since we have had failure, okay, by trading below that low, he expects us to grind and chop around until the next cycle low, which just so happens to line up right around the end of the year, with this cycle low here also lining up with that election date. And the reason I bring this up, okay, is there's a high probability this is correct. And if it is, okay, that's one thing. But I actually prefer not having this as the weekly cycle low and having this right here as the weekly cycle low. This is how I've got it. And why that's significant is because if Bob is right, then we will probably get something like he has shown here, more and more chop all the way into the end of the year. I would imagine most people, most Bitcoiners, especially if this is your first cycle, will have probably left the space and quit and gone to work a normal job. By this point, they'll, you know, how worn down have people been through this? They're probably not going to survive till the end of December. But if I am correct, and this is not the weekly cycle low, okay, and this right here is, that opens up another path. That would mean we haven't yet failed the cycle, okay? It would mean we've got higher highs and higher lows, and if we can just get a turn here, it puts on the table this. And that is incredibly significant because it gives us the space to do something like this, weekly cycle low, and then into that blast off. So I still maintain that it is all to play for here. We'll find out, right? Because if this is not the cycle low, if that's not the weekly and this one is, then what we will see is a push up here, okay, as per my yellow squiggle that I've been talking about of late. And if for whatever reason we don't get a push to new all-time highs, a breakout, retest, resumption, like I've been expecting, if we do start to chop around, then we can say, okay, we'll go with Bob's count, we'll probably relabel this to here, okay, and then at least we'll have clarity and a bit more of an idea and understanding of what's going on. So it's something to keep in mind. Of note, Bob mentions that there is always the chance in the most bearish scenario that that was the ultimate top, right? That was a left translated cycle back in March and that will remain the high. And thus he was putting on a scenario in the most bearish case where we do something like this all the way into the next 4-year cycle low. But he said if he had to guess, he would give it a probability of just 10 to 15% that that was the top, with the remaining 90 or 85% probability being that we will indeed resolve to new all-time highs. Just something to keep in mind. Something else to keep in mind, okay, is if we look at the whale data, whales are in accumulation. This is whales right here. They have shifted to net accumulation here. So whilst everyone is calling tops and suggesting we're going to plunge lower, the big boys are stepping into this market and accumulating, likely because they expect a markup campaign in the not too distant future. So with all that said, okay, let's take a look because today's closes are going to be super, super, super important to me. If I start with the stock market, again, long and bearish, right? I still really, really, really want to invalidate this, but I can't really take it off the table unless we close a weekly candle above the prior high. So like I said earlier, we need to see a weekly candle that's green, okay? If we get a close above there, then we can say, okay, fine, we found a cycle low, we've confirmed it by closing the weekly candle, and we can finally breathe a sigh of relief and scratch this off. But there's nothing in the realm of the laws of markets that says we couldn't see a big red candle today. And if we do, then again, it would have all the familiar symptoms of something like this, wouldn't it? So I really, really, really hope that I can scratch this off. I hope we can get a nice big green close today. But hopefully you can appreciate I want to stay open to all possible outcomes and not be counting my chickens too early. Exactly the same with the NASDAQ, okay? Start to close new highs into the week. And I will say happy days, long and strong, expecting a big rip to 23K plus. And I'll also be tempted to be getting some more exposure via the Dow. But for all of this to happen, we really do need to see this VIX be crushed on Friday. Today is, of course, Friday, VIX Crush Friday. The meme tends to play out more often than not. So if we can get a nice push down here, happy days, we close some green candles, and I'll breathe a sigh of relief for the stock market. Gold looks an awful lot like it's getting that cycle low swing in the expected window. So happy days there. We added a silver related position into the close yesterday in the members section. So we're positioned in case this thing is going to rip. Probably going to be adding for a short-term bounce play here if we can get a breakout today or perhaps Monday. So lining that up. This should be no surprise to anyone that's been following along since we've been talking about this for a bunch of weeks now. And then, of course, Bitcoin, okay? I see a whole heap of people in my comments saying, well, Bitcoin is dumping, or Bitcoin is crashing, or Camel, is this okay? We've moved down to 60K or 59K yesterday, whatever it was. And I don't really know how to say it other than I don't know why you care about a few K moves, okay? This is a big range, it's a big consolidation. It's something like 23,000 from top to bottom, right? It's about 23K in here. So do I care about the up and down 1, 2, 3, 5K? No, I don't care about any of that, right? The position is on. There's only two levels I really care about here. One is the stop loss, okay? Trade below that low, and we've got hard invalidation for this being a cycle low. And the other thing I care about is, can we actually get a breakout above the downward slope in red in line with my yellow squiggle? I mean, so far, I said ABC would make the most sense, half cycle low, and then we should be looking for a rip. The only component that's missing from what I said, and keep in mind I've been talking about this for, again, a couple of weeks at least, the only component that's missing is I want to see this thing push to the upside. If it doesn't, then fine. The market has spoken. It's my job to listen. And that's why we have to manage risk in all outcomes. But for now, at least, it's done exactly what I expected it to do. And if it can just continue to do what I expected it to do, we should be looking at a nice big push here. And I do note this is occurring at a time where a whole heap of people on Twitter are flipping bearish. A whole heap of larger accounts are saying that their base case is this. And as you can see from a cycle perspective and from Bob Lucas's idea, right, it doesn't really make a lot of sense. It doesn't make a lot of sense to be plunging from here. If anything, it makes more sense that we got to go up first, okay? You can see up a little bit, then down, or up a lot and then down. And of course, if my count is correct, it'll be up even more and then down something like this. So I still maintain until the market shows me something else that this yellow squiggle is in play. This is the base case. We should have found a low here and we should be looking for a nice big reversal. Given that this is a cycle low or a half cycle low, it's only reasonable to expect a big strong push, okay? Take a look at this, cycle low, big strong push, cycle low, big strong push, okay? Big strong push every single time, and not just here, okay? All of the other ones as well. Look at this, even this lackluster kind of grind up, okay? Still quite a big gap. That's still 40 to a high of 48K here. Big strong push, big strong push. You can see outside of these consolidation cycles, which I don't think we're in at the moment, it's only reasonable for me to expect a whole heap of strong pushing coming out of this cycle low. So again, until it shows me something different, okay, I stand with this as the base case. I stand with this as the idea. It looks to me like it is ready to move higher, and I do think that would upset the most amount of people at this moment in time. Last but not least, if the dollar is going to top, this seems like the place to do it. I'm not really calling tops here, but if it's going to top, this ought to be the place that it happens. And the same deal with the yields, okay? If these things are not going to be confirmed as a trend reversal, then right now would be about the time to see this thing move sharply to the downside. Let's see if the bond market likes the idea of a 25 basis point cut, okay? Because if it doesn't, it will start to move sharply to the downside. And if the yield moves to the downside, again, it'll be another tell it to the bond market situation. We'll be putting 50s back on the table much, much quicker than most people are anticipating. And once more, I suggest we will probably see significant repricing in the CME by the time we get towards November the 7th meeting. So what a week, okay? Hope for green. And if we don't get it, then we'll talk about downside scenarios tomorrow in the weekend's deep dive. If you like what you saw and you're not subscribed, make sure you subscribe so you can stay notified and get underneath these trades out of these cycle lows and follow along. you're a level 3 member, look out for any new trade setups that are coming. There might be a gold position later today. And I think IREN is pretty close to a cycle low, so look out for that as well. Other than that, I hope you are all doing well in life. I hope you all have a fantastic weekend. I hope you'll join us for the weekend's deep dive tomorrow. And until then, take care from me. All the best. God bless. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies on a bump.